Hi guys, welcome back. I hope you're doing good. I hope God is keeping you well. My name is Esther Chera, and again we're back with another video as promised in the previous video. So today, um, straight away we'll be looking at market structure now. Um, um, I hope you are ready to learn. Take off your pens and take them out, and actually let's dive into this straight away. So what is market structure in my simple terms now? Guys, please, I'm going to use my terms, my definitions. I'm not going to use anything that, like in an English proper way as though a teacher is going to mark me. No, not really. For me, I understand market structure as, in simple terms, I would say a pattern or maybe like a framework that the market is currently displaying. Simple terms, what is the market doing? Buying, selling, what exactly is the market doing? You understand that? Thank you. So there are so many ways that that you can read the pattern of the market. There's so many ways that you can actually read the market. Personally, these are just a few things of how I read the pattern of the market. Say higher highs, higher lows, and of course the opposite is maybe lower highs. That's if the market is selling, or bearish, and then we have lower lows, right? And then the other that I actually use is swing highs. You can call it swing high, and then swing lows. And then the other, which is my favorite, actually I feel like with this other one, the last one, which is BOS, which actually stands for break of structure. I feel like if you actually understand break of structure, you can easily identify these other ones above, right? So this turns out, break of structure turns out is actually my favorite. As long as the first thing I do, of course, when I just open the charts is mark what is my recent break of structure, just the way I showed you in my last video. If you haven't watched it, please go and watch it. Yes, it's something amazing. You'll understand something very, very vital in there. So first thing is I'll look for a break of structure. Now, after finding out a break of structure, I'll go in for these ones, and then yeah, of course the eyes will always go for these ones. Now when you have experience with the charts, these things become automatic. These higher highs, higher lows, lower highs and lower lows, you don't even need to really just give them attention. Just like if you are a beginner at this moment, please pay attention to really understanding higher highs, higher lows, and these ones, right? After understanding these ones, now come back to, because this actually is these higher highs and this first one and this second one, let's give them those names: first, second, third, fourth. First and second is what actually will give you a definition of either the market is going up, so you can look for buys, or this one will actually give you the mindset that okay, we're going to look out for sales. So that is actually basically the first thing your eyes land onto, but it becomes automatic after some time when you relate it with the charts, that all you want to look out for is boom, the recent break of structure. Let's look out for this, and then let's look out for the point of interest. So I'll delete this one. I hope you understood that. First things first, market structure. Let me show you guys how I actually read it. First thing is you need to understand break of structure. Now we have the external, which we are majorly and mostly interested in. I shall give it as break of structure. I explained how to actually find break of structure in my previous video. So if you want to learn how to really find that out, please go and check that video out. I'll just put the link up there. This becomes a break of structure. Now you realize that the market is not always going to give you something very smooth like this. No, there'll always be something like ranging inside, but what is these ones that are inside? You realize that these are actually called internal break of structure. Just give it here for you. Internal break of structure. It's actually break of structure, but it is internal. It is. But which one are we interested in order to actually, because you're here to actually make money, right? Or to find somewhere where you can actually get a setup. The ones we are interested in are the external ones. These outer break of structures are the ones that we are interested in. Let's first mark all of them. So we'll mark this as a break of structure. Then this one too is a break of structure. Now there's actually something very interesting about that I'm about to show you. So please be alert and pay attention, right? So I hope you understood the internal break of structure and the break of structure. We are not interested in the internal break of structure. We are interested in the outer break of structures. Now, apart from us being interested in the break of structures, what we're also interested in, like I told you guys when I was beginning the video, is we are interested in swing highs and swing lows because we want to catch a move, okay? These always, the market will never just always just move up like this. No, the market will always come, fetch liquidity or some money in that manner, then continue, fetch something which is money, continue moving upwards, okay? So the question is, when it comes down, what are the points that we are interested in? Because again, on such a market, we want to catch buys so that we can flow with the market, okay? Now we want to one of the points that makes us be sure that the market might come back to this point is that the point that the market always gets back to are points like the swing lows, right? So this becomes our swing low. Now also in the previous video I explained what swing lows are, so go watch it again. Swing low is that last leg, right? So at this point of the swing low, we're going to find our point of interest, which is usually here, and we're sure the market will always tap into that. It can be an order block, it can be a fair value gap, but usually the market taps into that point, okay? Now the market may not always reach the swing low. I want you to understand that the market may not always reach down to your swing low. I'll show you an example when we get to the charts. But in this way, sometimes the market can actually reach here and then continue up, right? It came here and boom, it went up. It didn't reach our swing low. Why? Because inside this way, there is what we call, remember this? Internal break of structures, whereby the market has order blocks and fair value gaps in there. So there is just a way that you're not sure which order block or point of interest will the market return to, even though you must have a formula that, okay, this is my swing. You have to set a trap, right? So your trap is usually here, but you have to look out for those internal break of structures because again, they sometimes have, I'll call it the guts to actually support the market to push it back up. So your eyes have to always, there's things to confirm when they're going up, okay, which we shall again look at. So I hope you understood that. Okay, so this becomes our break of structure also. Now guys, like I told you, the market is not always going to buy. It may buy for such a long time. For example, we can see gold has been buying for the last okay, let's go here so I can just show you what I'm trying to say. When you look at the monthly candle, which is just for looking, I don't really take trades on that, you will realize that gold has been buying for quite some good months, you know. Yes, but the market is not always going to buy. It will at least sell at some point. So the question is that shift from when the market is actually buying to the change it actually gets when it's buying to shift into, okay, now we are selling. What is that we look for as traders for us to actually change our bias from bullish to bearish, for us to be like, okay, we've been buying, right? But now we have seen this, and so we're going to actually change our bias to start looking for sales. What is that we look for? This is exactly it. This is what I was telling you guys, that I'm about to say something very, very crucial. When I was actually learning trading, one of the things that disturbed me the most, and I know it disturbs a lot of people, is this thing right here. I call it the change of character. Some people call it market structure shift and all that, but yes, that's why I call it change of character. Now the market is buying. Now we see this leg, which is like a swing low, right, of this break of structure. We expected the market to actually reach here, come back down, right, to the swing low, and bounce back up so it can break this point and it becomes a break of structure. But that's not what the market did. The market instead broke the swing low of our current break of structure. When it broke it, now we do not call that a break of structure, we now call it change of character. Do you understand that? Yes, when it breaks the swing low, if it had broken this one, this would be our change of character. You get, the market has changed character. It has been bullish, that is the character. Now it changes into bearish, that is it. Now this becomes our change of character. Simple terms. That is one of the most difficult things. Anyway, I don't know for you, but for me, it took me time to actually understand what change of character is. Then now from there, we change our bias and be like, okay, since change of character has happened, it looks like we are actually going in for sales. Now this is when we see the market forming lower highs. This becomes our break of structure to the downside, okay? This is our break of structure. Now this is when we start looking for sales. We wait for the market to actually tap into this part, which is our point of interest. Maybe there is a fair value gap at this moment. Okay, and boom, we now go in for what? For a sell. Is that difficult, guys? I hope not. But yes, that is the simplicity of market structure. I know there's a lot of people trying to explain too much, but this is market structure in simple terms. Of course, depending on your strategy, there'll be a lot of things, but if you're really interested in learning this strategy, which I can actually teach you, but which I'm actually teaching on this channel, if you're interested in this strategy, this is all you need to know, basically, okay? So let's trade. Let's go straight up to the charts. Now guys, keep in mind there is something I am keeping for you here. Let me first hide it. It has been shown the whole time, but I want to show you, if you are a beginner and you feel like those things are really hard for you, it's quite difficult for you at the moment to just tell market structure, maybe break of structure, you know, I've come here to simplify things or to make things easy for you. Let's go a little bit back and we just look into trying to define these things for us so we can understand better on the charts. Okay, this is a break of structure, right? Now guys, going back to what we call a breakout structure, let me just tell you something. If this is a breakout structure and let's say a candle formed, let's assume this didn't happen, then there's a candle say here, let's see, yes, no, I don't want it to be another block, but let's say there's a candle that happened here and it has a wick from the candle, it has a wick, right? Now I do not consider this, I wouldn't draw this as a breakout structure because it's a wick. I do not consider a break by a wick as a breakout structure. I consider if the body broke through, that becomes a breakout structure. If it broke through like this and closed above this line, this point, right, that becomes our breakout structure. So however it is, let's say now this, let's say it was happening here and there's this wick, we didn't consider that as a breakout structure. It should be a body and it should be a body that closed above. Now that qualifies to be a breakout structure. Okay, yes, that qualifies to be a breakout structure for us. Okay, yes. Now guys, at this point this is a breakout structure. Okay, where is our swing low? Our swing low is right here. The lowest leg that happened was this. Now clearly you would want to be going in for buys, right? Because it's very bully, it's forming higher highs and higher lows. But now I remember telling you guys that when our point of interest at this point, or where we anticipate that the market will actually reach to, so we can catch a buy and flow with the market, is at this point. This is another block, right? But we clearly see that the market didn't reach there. You get? Now this is where I tell you guys that be very, very open. I remember when I was being mentored, this is exactly what my mentor told me, that you know what, the point of interest is always going to be close or at the swing low. But when you actually relate with the market better, you realize that okay, the market actually rarely, it does tap, but rarely taps this area and goes and continues. So the thing is, you have to always find those point of interests within the range. You know, there are people who will tell you that, you know what, you can always find Fibonacci and then, you know, tap into that, and yes, it can work, but it's not always accurate. For me, what I do, and I know it works for sure, is that mark all those points of interest. For example, this is another block. This is my major point of interest. I anticipate the market will reach there. But again, I'm going to pay attention to the other blocks that are within the structure, that are those internal. Do you remember when I told you internal breakout structures? Yes, I'll pay attention to them. Now, always also depending on the pair. For example, gold loves to bounce off of fair value gaps. So as you go on, you understand the pair that you love most, and then you understand it better. There's another block, guys. Then you realize that the market didn't actually tap here. It did not. Will I miss the move? Yes, I will, if that is just where I'm concentrating on. Okay, but there's also another one here. That is actually where the market tapped into. So the thing is, I have to be flexible enough and just mark those points that are point of interest within my structure. You get? So the thing is, but how do you know now that the market will reach here, or this one, or the downer one? reaction of the market when it reaches there. For example, one of my entry criteria, which again I'll do a video on, guys, is when it forms a change of character. When you go down to that lower time frame, which I don't want us to go anyway, but when you go especially to the 5 minutes or even 15 minutes, usually I use the 5 minutes, you realize that the market formed a change of character. You understand that? Yes. Now, and we'll enter, actually we'll be reaching out for this area, which actually hit TP and then bounced off, you know. Again, when we reach there, you realize that we formed a breakout structure, you know. Now when we formed a change of a breakout structure, you realize that there are these internal ones, which again, this becomes our swing low. At this point we don't even have, okay, we have this, but like you realize this becomes our point of interest. Then there is this area to also pay attention to, and then there is this one, and actually has a fair value gap, which the market actually reacted to and then bounced off up. So do you now realize that if you understand market structure, it will be so easy for you to actually catch moves off of the market? Okay, this move, okay, this, and then this, then this, and this, right? Then we broke. Now guys, remember what I just told you. This becomes our current breakout structure. This one here, this is our breakout structure. Now we anticipate at this moment, we expect the market to come, break this spot, then come back down, react from our swing low, which is this spot, and then move back up, okay, and so that it can break this and become a breakout structure, and then we continue moving up. But that's not what the market did. What did the market do? The market instead broke our swing low. So when it breaks the swing low at this point, this part, instead of becoming our swing low, because it was broken, this is what becomes our change of character. Do you hear that? This becomes our change of character. Now you realize that after that, the market actually starts to form what we call breakout structure to the downside. Okay. Yes, but it starts forming. It starts at that point we start changing bias. We're now looking for sales at this moment, which it actually did for this moment, right? We would actually look for sales, and then so we come to the end of this video, guys. But what one thing I was keeping for everyone that has stayed up to the end, especially the beginners, is something that actually can help you to actually learn, not learn, go practice what you've learned, right? So as you're doing, say, back testing and doing all that, just set time aside to understand market structure, and then go to the chart and just mark those points. Okay, now who is that teacher that is going to kind of mark you when after doing everything? Just come here to the indicators and search for something called SMART learning concepts. When a friend of mine actually noticed I was having a hard time getting to really just mark out change of character, they gave me this mind of looking for this one. So yes, it helped me. This is it, guys. This one here, it has, I think, the highest number of followers. I don't know, but yes, it popped out as number one for me because I think I've used it so much, especially last year when I was trying to understand this stuff. But yes, this is it. So you tap on it, and guess what it will do? It will help you. First thing is, do not be lazy person. First mark them out and mark yourself. Just go put this thing, or you can it will always appear here. It will always appear here. So just turn it off like that. And then mark your stuff, mark yourself, mark the stuff, break of structure, change of character, and all that, and then just turn it on and see if you marked the correct places. Yes, so this is the end of this video. Stay tuned for the next one.